Welcome to Phillip Futures Market Watch. My name is Vanessa Tan, Investment Analyst with Phillip Futures. In this week's edition, we feature the outlook for raw sugar listed on Intercontinental Exchange. In 2013, raw sugar prices trended downwards for the first half due to abundant global supplies. Prices gained support as unfavorable weather in Brazil took a toll on harvesting. Prices turned down during the end of the year on ample supplies, especially with the Indian and Thai harvest. In 2014, prices continued to be weighed by bearish news of more than usual amount of cane being crushed by Brazilian mills. This could potentially result in higher production of sugar. However, sentiment was pressured when Brazil, top grower of cane, experienced drought-like conditions which put raw sugar output at risk. Production was adversely affected, supporting prices. Weather in Brazil took a turn for the worse in 2014 as Brazil struggled with unfavorable weather conditions. Hot and dry conditions exerted stress on the cane crops in Brazil, and it did not help that the much-needed rainfall did not arrive early enough. The worry now is the amount of damage being inflicted on the cane crop in Brazil after experiencing such unusually harsh conditions. According to Unica, an industry association in Brazil, the drought reduced about 40 million tons from the 2014-15 crop. What this means is that the output of sugar from Brazil is likely to be adversely affected this season. The much-needed rain received in Brazil is a piece of good news, but it might not be enough to save the damaged crop. It may be too early to quantify losses right now, but according to SOMA, a Brazilian weather forecaster, domestic sugar mills would feel the effects of the hot and dry weather conditions on the cane crop in the second half of 2014, such as declining yields. Improving global growth would also support demand for raw sugar. The International Monetary Fund increased its estimate of global growth from 3.6% to 3.7% for 2014. IMF credited this upward revision to higher growth in developed markets such as the United States and the Eurozone. In fact, the world economy is likely to experience further growth despite possible downside risks from China's engineered slowdown and weak recovery in emerging markets. With improving global growth, we can expect demand for sugar to rise. Global sugar consumption is likely to experience growth on recovering economies. This is reflected by estimates from the US Department of Agriculture showing a consistent increase in world sugar consumption. In conclusion, we see that there will be a global surplus for the fourth consecutive year as global production exceeds world consumption. This points towards a well-supplied market, especially with India, the world's second largest producer of sugar, boosting exports by implementing a new subsidy scheme. With government subsidies to reduce the domestic surplus of raw sugar, Indian sugar mills will look to boost exports in an effort to reduce their losses as domestic prices continue their decline. However, there are risks stemming from hot and dry conditions in Brazil. If rainfall is insufficient to relieve crop stress, or weather takes a turn for the worst, it may further reduce supplies from Brazil. With a reduced cane output than previously expected, expectations will be that the global sugar surplus for 2014-15 could be severely reduced, or if the situation becomes highly pessimistic, can even result in a deficit. In fact, the International Sugar Organization cut its forecast for global sugar supplies in 2013-14 from 4.7 million tons to 4.2 million tons. This is the daily front-month ICE raw sugar chart. After prices broke out from the red downward trend line, we were looking for technical indications of a change in trend. Now we see further confirmation. The green short-term moving averages have made a convincing crossover above the red long-term moving averages. The MACD line in red has moved further into the positive region, and that is the bullish region. These indicators suggest an uptrend. Going forward, we expect prices to continue trending upwards. However, we are also wary that prices are vulnerable to a price correction. RSI just crossed above the overvalued level of 70. The gap between the MACD line and the signal line in green appears to be too large for comfort. These indicators suggest possible correction in prices. Therefore, resistance is pegged at 18.9 and support is pegged at 16.2. For more information on the risks and returns of investing in commodities, please approach any representatives from Phillip Futures for further discussion. That is all we have for you today. I am Vanessa from Phillip Futures. Tune in next week for more weekly Market Watch videos.